Good morning, this is Sakis Paraskevov, Senior Fundamental Analyst at IronFX, bringing you the morning comment for the 18th of August. FOMC keeps its options open, but dollar slumps. The dollar came under renewed selling pressure yesterday following the release of the FOMC July policy meeting minutes. The committee kept the door open for a rate hike as soon as September, with some members judging that another rate hike would soon be warranted. However, most officials appeared skeptical to commit to anything until more data validated a rate move. Given that data following the meeting have been mixed overall, this suggests that the majority of the members are likely to wait for much longer before voting for a rate hike. This added a dovish tilt to the tone of the minutes and also came in contrast to recent comments from New York Fed Dudley, who suggested that markets are underestimating the possibility of a hike as early as September. The next major risk event for the greenback is the highly anticipated speech by Fed Chair Yellen at the Jackson Hole Economic Symposium next week. Even though we expect the Fed chief to leave all options on the table by adopting a cautious yet optimistic view, as has been her usual method of operation in her last few appearances, a reference to September being a live meeting may cause a market repricing of the rate path. Thus, in line with the minutes, we believe that Yellen is likely to indicate that September remains a live meeting, though much will depend on the data. Overnight, Aussie recovers as unemployment rate falls. Australia's unemployment rate fell unexpectedly to 5.7% in July from 5.8% in June. The Australian dollar surged on this encouraging data and extended its post-FOMC meeting minutes gains against the USD. The strong jobs report is likely to be encouraging news to the RBA, which opted not to introduce an easing bias in the statement accompanying its latest decision to cut rates, and stated that it expects unemployment to remain around current levels in the coming months. Aussie USD moved back above 0.77 and it could challenge again its recent highs around 0.7750. As for today, the highlight of the day will be the release of the UK's retail sales for July. Given that this will be the first major indicator of how consumer demand fared following the referendum, we expect it to attract a lot of attention. The forecast is for retail sales to have risen by 0.4% month over month, a turnaround from an abysmal minus 0.9% in June. The CBI and BRC retail sales gauges painted a mixed picture in July, with a decline and a rise respectively. Consumer sentiment indicators suggested that optimism was indeed impacted by Brexit, with both the TR Ipsos and the GfK consumer sentiment indices having declined. A rise in retail sales for July could support the pound today. However, moving forward, the risks surrounding retail sales are clearly tilted to the downside, something also acknowledged by the Bank of England's latest inflation report, where the Monetary Policy Committee judged that private domestic demand growth is likely to slow over the coming year. Elsewhere, in Eurozone, the ECB will release the minutes of its July policy meeting. Even though these don't usually move the euro, the discussion surrounding the impact of the Brexit vote on Eurozone could attract some attention. President Draghi was upbeat at the press conference following that gathering, stating that after the referendum, European markets weathered the spike in volatility with encouraging resilience. The minutes are likely to show whether the Governing Council was unanimous on that, something that could set the bar of whether markets should expect further stimulus by the ECB this year or not. We also get the block's final CPI for July and the current account balance for June. In the US, the Philadelphia Fed Business Activity Index for August is expected to have turned positive after a dip into the negative territory in July. Initial jobless claims for the week that ended on August 12th are expected to have declined marginally, something that would cause the 4-week moving average to rise. As for the speakers, we have two speakers scheduled for today: New York Fed President William Dudley and San Francisco Fed President John Williams. Both officials made some very interesting comments in the last few days, with Dudley being on the hawkish side and indicating that markets are underestimating the likelihood of a hike this year, while Williams maintained a more dovish stance. In the aftermath of the relatively dovish FOMC minutes and a slowdown in the CPI, it will be interesting to see on who the market will focus on. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX, wishing you solid trading.